Welcome to the Wave Strength. Innovative solutions for a secure retirement. Presented by Pacific Life.
Hello, everyone, and welcome to another exciting episode of the Wave Strength podcast series. I'm your host, Jim Breen, Head of Marketing with Pacific Life's Institutional Division. With us today in the office is Maya T. Pillai and Nicole Brooks, both from Pacific Life's institutional team. Thank you both so much for joining us.
Happy to be here.
And we have a great episode. We're going to talk about stable value wrap today in the episode. But first, I'd love for you both to talk a little bit about your role with the institutional team. Maya, you're head of stable value wrap. Nicole, you are stable value relationship manager. So Maya, let's begin with you. Maybe you can help our listeners and our viewers today understand a little bit more about your role with the institutional team.
Yeah, absolutely, Jim. Thanks for having us. Certainly, as taking over head of stable value wrap a few months ago, we have done a lot of work with our team. I head up the client relationship management and product and risk management teams here at PL in our stable value team. I also have a dotted line with the contracts and legal, as well as our operations groups and our investment compliance, which kind of makes up the multi-prong approach for stable value wrap team. I oversee $36.6 billion of business along with all of our team. And, we're a strong nine.
That's great, Maya. Thanks for sharing that. And a lot of the great work that the Stable Value team is doing, we'll uncover in this episode of the podcast. Let's move to Nicole. Nicole, share with us, if you will, your role and your I know a recent addition to Pacific Life, but maybe a little bit about your background in the industry as well.
Yeah, I actually came from the investment manager side.
Okay.
And as the relationship manager here at Pac Life, I'm responsible for handling all the day-to-day questions from our clients who are investment managers. I also collaborate internally with different groups, operations, risk, legal, contracts, to manage our clients and to grow the business.
Excellent. Very good. And welcome to Pacific Life, a growing team, a great team. And a testament to our institutional team as a whole and the resources that are being poured into this new division within Pacific Life. A lot of great things to come. And that is why we're here today to talk about one of those important elements, stable value. What I would ask, though, would you mind just explaining to our audience a little bit about what stable value is for those newcomers that may be interested in learning more about it?
For sure.
Yeah. Yep. Stable value is an investment option in your employer's retirement plan.
Okay.
Often looked at as the safe option.
Why safe? Why safe? I've heard that mentioned so many times before.
Yeah. The focus is on the principal preservation.
Okay.
So the preservation of your investment.
Great.
With a credited rate of interest, similar to bond funds,
okay,
but without the market volatility.
Okay.
Yeah.
Wonderful. And where or when is this used?
Great question. One of the biggest things that we focus on is making sure that plan sponsors, the individuals with whom the retirement plans exist, are educated on who should be investing in this option. So the people that are or would be tend to be closer to retirement. So call it 50 plus. As retirement age continues to increase, though, that number would also increase. But folks that are more conservative investors, safe,
mm-hmm,
as well as those people who are nearing retirement. The other place where we have stable value, or where stable value is utilized, is within education savings plans, so 529s. And for those people that investing, as you get closer to going to college, if that's how the funds will be used, you would start putting it into stable value.
We're 529 too, not to cut you off, but
yeah,
4 kids here, and
yes,
it's definitely something that's on our radar. So important that opportunity to utilize something like that, because before you know it, these kids are just. I mean, I have a 9-year-old who I look at and I'm like, I was just taking you home from the hospital. It moves so quickly, and that's why something like the 529 would be so important.
Absolutely. So the earlier you invest in a 529, the more that money is going to grow by the time your kid's 18. Going to college, and then you can use those dollars to pay for it, or at least minimize how much you have to pay out of pocket, or they have to pay out of pocket, which is important. But where stable value comes in for that is typically we start seeing the investment in stable value at around 14, 15 years old, so that you have that principal preservation, which Nicole just addressed. And, we make sure that it's still there when they go to college.
Absolutely. It's so important. And, to provide that conservative platform, conservative investment platform, conservative opportunity, that safe opportunity is so important, especially maybe in today's day and age where there's a lot of volatility. We have inflation and a lot going on that might make somebody that is trying to plan 20 years, 15 years into the future feel comfortable using this vehicle. So maybe we could talk a little bit about the type of individual that might consider an investment in stable value. I know we talked a little bit about the 529 scenarios, but maybe we can go a little deeper.
Sure. Yeah. So as any participant joins a retirement plan at an employer when they are first out of college or a master's or whatever that might be, you look at your investment options, and typically you get to see the entire suite, and you have to decide, what do you want to invest in? A lot of employers have moved to a advice model where it says, are you a low risk, a medium risk, or a high risk taker relative to your peers or what investments they may have in the investment lineup? When you are doing that at age 22, your risk tolerance is likely going to be higher.
Mm-hmm.
If you survived the great financial crisis in 2008, call it what I'd say had lingering effects until 2014, you would have wanted to be in stable value. Unfortunately, there's a lot of folks that weren't, and therefore there was an addition to stable. There were many dollars that flowed into stable value, which benefited the entire industry. But what it really focuses on is the individuals who are getting closer to that retirement age, probably around 45. You might start considering it. Small allocation, and it continues to grow. By the time you're at the end or nearing, like right before retirement, you would be, a significant portion of your assets would be in stable value.
Well, that's interesting, Maya. Perhaps you could discuss, Nicole, a little bit about the current landscape. Let's discuss what else is out there right now.
Well, let's just talk a little bit about assets and stable value. At the end of 2021, there was over $900 billion in assets in stable value. There are in the market about 15 different investment advisors and 15 different wrap providers.
Okay.
Covering the stable value business.
Interesting. And, what sets Pacific Life apart? What makes Pacific Life different?
Great question. Pacific Life Stable Value Team has been in existence for a very long time. I won't date all of us, but we have had a synthetic GIC product, which is the stable value wrap product, since 1993. So we are closing out year 30 of this product here at Pacific Life.
Wonderful.
We have managed to retain assets for all of that time and have contracts that were incepted in 1993. One of the things that we have focused on and we feel like is our value proposition is our tenure in the industry, alongside many of the other insurance providers who have been in the industry. And what we feel is that our team has a deep bench in knowing what is going on in the stable value world. So as everybody knows, there's been quite a bit of volatility in the equity market and in the bond market in 2022, and also the last 3 years, COVID and the war in Ukraine. I think the big thing is that what we have to offer is stability in that time, and participants know that they can keep investing with the investment managers we provide insurance for.
And that stability is so important. With Pacific Life, our story is so strong. Over 150 years of financial strength and stability, founded here in California. So this 30-year-old platform is really based in something strong, something solid with a significant history of financial strength and stability.
Absolutely. Yeah, one of the things that we feel like gives us the edge is our credit rating and our financial stability, and we certainly make sure that our clients are aware of that.
Absolutely. Please, Nicole.
I would add that we have a lot of support from senior management. They're very familiar with stable value product and very strong relationships with our clients.
Yeah, and I think that's also tying it back to what we mentioned at the beginning of this episode. That support, and I think we really have the support from our leadership to forge ahead, to engage new markets, and to innovate, and to continue to innovate the way in which we can take care of our customers and our clients. Let's switch gears just a bit here and talk about where stable value at Pacific Life is growing. Let's talk a little bit about the current landscape, the current business, and maybe you can provide a little insight into that future.
Yeah, absolutely. So, Jim, I started with Pacific Life 4.5 years ago. And at that time, we had about $22 billion of assets under wrap, as we call it in the industry. At this point in time, 9/30/2022, we've got $36.6 billion of assets under wrap. So quite a large increase of assets over the 4.5 years. That's a testament to multiple things. One is senior leadership's desire to continue being a mainstay in this business line. Number two is the added support we've gotten for the team. So our team's grown in size. We have dedicated support services and functional areas to assist with making sure our stable value business continues to grow and continues to thrive for the remainder of the industry. What we have focused on over the last 4.5 years is really growing our stable value asset manager, stable value investment manager base. We used to have 9, and now we're at 14 stable value investment managers. That's a testament to our ability to diversify for the investment manager and really grow our block in conjunction with them growing theirs. Of course, COVID-19, as well as the war in Ukraine, added dollars because of equity market volatility. But one of the things that we can say is we've got all the right people to keep us growing. The next piece of that is really just how do we grow? And I think, Nikki, you can handle that one.
Yeah, I mean, there's exciting things happening right now in Congress. There's, in the form of Secure Act 2.0, looking at opening up stable value to a broader group of retirement plans. And we are watching that closely.
And that's absolutely right, Nicole. We just actually had an episode that we produced with Seaver Sowers, Pacific Life's head of government relations out there in D.C., and he outlined a lot of his thoughts on the Secure Act as well. So I would encourage our listeners, our viewers, to head over to YouTube and search Seaver Sowers in the Wave Strength and check that episode out as well. But is there anything else either of you would like to add to the conversation before we sign off?
Great question. I think that what we want to focus on is Pacific Life has been here a long time. We've continued to deliver on our products. We want to make sure we're putting our best foot forward, and we want to make sure folks are getting the right education about stable value as a product line. And we'll be here to answer any questions.
Well, this has been an excellent opportunity. Maya, Nicole, I want to thank you for being here and joining us on today's episode.
Thanks so much, Jim.
Yeah, thanks for having us.
Absolutely. And to our audience, I want to encourage you to learn more about what we're doing with the Wave Strength and this thought leadership platform. You can head over to YouTube, Spotify, and Audible, search the Wave Strength, and don't forget to hit like and subscribe so you can stay current with the content that we're producing. I also want to encourage you to head down to the comments and let us know what you think about this episode or ask any questions that you might have for our stable value team. Thanks so much, everybody, and have a great day.
This has been another episode of The Wave Strength, presented by Pacific Life. Don't forget to catch us on YouTube and make sure to subscribe. Although this podcast is presented by Pacific Life, the opinions and views expressed are those of the hosts and participants and do not necessarily reflect Pacific Life's views on any of the topics discussed. Pacific Life refers to Pacific Life Insurance Company, Newport Beach, California, and its affiliates, including Pacific Life and Annuity Company. Insurance products are issued by Pacific Life Insurance Company in all states except New York, and in New York by Pacific Life and Annuity Company. Product availability and features may vary by state. Each insurance company is solely responsible for the financial obligations accruing under the products it issues. Pacific Life Stable Value is a group fixed annuity issued by Pacific Life Insurance Company, Newport Beach, California. Pacific Life Insurance Company does not solicit business in the state of New York, nor is it authorized to do so. This material has been provided for informational purposes only. It is not an offer or solicitation to buy an insurance product or security. This material should not be construed as investment advice or be used as a primary basis for any investment decisions. This material has been prepared for by institutional, sophisticated, and/or qualified investors. This material may not be shared, distributed, or in any way otherwise reproduced. This podcast was recorded on November 4th, 2022.
Thanks for joining us on today's show.
We'd love to hear from you. Join the conversation below and leave a comment on your thoughts on what the industry can do better for participants as it pertains to lifetime income solutions. And if you'd like more interesting content, click one of these links over here.